Hey everyone, my name's Randy Morgan. I'm the branch manager of M&T Bank in Denville. If you haven't been to Denville, it's a great little town, and it's very unique because it's got kind of like you see in those old school movies where there's a diner, there's a candy store, there's a laundry, whatever. It's like that, and there's actually like two of everything, which is kind of cool. So it's got it pretty much everything you need, and great little town. Everybody's just so involved, and it's amazing since I've been there. But today, I'm not going to talk about downtown Denville. I'm going to talk about small business lending. So I'm going to share my screen. And then, all right, can everyone see that?
Yes.
Yeah, okay, cool. All right, so this is a little tutorial. We're not going to go too into the weeds just based on time, but small business loans, what every business owner should know. So we'll click through. So you'll basically learn what are small business loans, how do they work, the types, how to apply for an SBA loan, and we'll review. So I'm sure a lot of people know what small business loans are, but really they are a key component of economic growth for the business and their employees. So when you go to an outlet, right, or a strip mall, and there's 10 stores and 4 of them are out of business, that's not good, right, for anybody. It's not good for the business there. It's not good for the town. So small business loans really help a lot of small businesses with a variety of things, just even having it for working capital when needed. Sometimes, you're waiting to get paid, so receivables, things like that. They're just great, and you can use them to hire employees too, if you're looking to expand and grow. So there's another way too. Like sometimes you could do like when you're trying to buy out a building, you could do like a commercial mortgage, new equipment, furniture. So what we're going to be going over shortly too is the different types of loans and how to use them. So for instance, there's term loan, business line of credit, and equipment loans. So the big thing is I sometimes see people use their line of credit to finance equipment. It doesn't make sense. So with a piece of equipment, let's just say a plow, a backhoe, something like that, let's just say it lasts 5 years. So if you use a line of credit and you don't pay it off within 5 years, you're upside down on the loan. So when we do term loans, we try to figure out, okay, how long is this equipment going to last? And then let's set the payoff up for that. So either, 3, 5 years. So to make sure you pay off that loan before your equipment expires. Term loans, kind of the same thing. You kind of have an objective of, hey, I'm going to borrow this money. I have a use for it. I'm going to pay it back. Business lines of credit are really good for working capital. So for instance, I always call them widgets when I'm using the example. So you're buying X amount of widgets and you're selling X amount of widgets, but you're waiting to be paid back from the widget company. This is great. So you're not dipping into your own pocket, or maybe as a small business, you don't have the money because you're just still so new. You're building your client base. Small business owners, I always tell them in that first 2 years, that's where you learn. You're always going to make mistakes, and that's fine. We're here to kind of help you make as little mistakes as possible. SBA loans are really popular, and they're really important too, because if you could see, they're really a great support and resource for small businesses and offers guarantees for the loans. So they were basically created to help startups and are executed by commercial lenders who are approved by the SBA. So M&T Bank, actually, we have internal SBA lenders, and I believe we're about top 5 in the country. So what it comes down to is usually these go to newer businesses. That's what the SBA is for. When the SBA is lending, or even when we're lending, we like to see some skin in the game, that you really want it. So for instance, we're going to need convincing, right? A business plan. We're going to need good credit. Good credit is like the foundation of everything. If you have bad credit, and that's just even in the personal space, right? You're trying to get a car loan. You're trying to get a credit card. You're trying to get a house. The better your credit, the better the deal you're going to get, always. So when we talk about documentation for the loan and I talk about skin in the game, we want to see a business plan. That's huge. 5 years projected financial statements, cash flow, balance sheet. If we're going to lend you money, especially the SBA, they're going to want to see a lot of, they want to see some dedication to the loan. Personal background, a resume, income tax return, all those things are really important when we're going through everything. So when we do documentation for the loan, loan history, bank statements, if there's collateral involved, what's the use of the loan, and how are you going to pay it back? And we actually will help you with a lot of these things as well and kind of put the package together. We kind of, when we do loans, we have a whole team, including an underwriter, business banker, relationship liaison that helps with everything. There's a lot that goes into these loans. Unfortunately, it's not back in the day where it's a handshake and you sign a piece of paper. There is a lot that goes in to these loans. Depending on your specific requirements, you may have to, sometimes it depends, like especially newer businesses, there's always a lot more involved. Older businesses, it's always a lot easier because they're more established. A lot of times we'll say it's about that 2-year hump, right? So after you get past that first 2 years of business and you're doing well, you know, you're a viable business. But sometimes we'll ask for license, registration, if you're buying a building or you're renting a building, the lease. It's really important you have your formation documents ready all the time because we need those to even just open the account. Any contracts, franchise agreements, things like that. So just make sure if you're ever going to apply for a loan, you have all your ducks in a row. So basically, in summary, you're going to want to know your numbers, know your options, be transparent, and we call it the good, the bad, and the ugly. And that's it. Is there any questions? I know I kind of flew through that.
Do you require and always require a personal guarantee?
Typically, yeah.
Okay.
Typically, yeah. When you're,
do you need a personal guarantee from every borrower that's on the loan, regardless of their ownership?
No, it depends on, a lot of times it depends on percentage of ownership. Usually it's at 25% threshold. Okay. And you know what, too, the funny thing is every deal is different, right? So when we're going through these, every deal is different. And it depends how much you're borrowing too, is a big deal as well. What's interesting though, like if you apply for, say, like a business credit card, it will hit your credit, but it comes off fast once it's approved or declined, because they really just need to make sure that you're worthy of lending as far as your credit goes. And that's pretty much it.
So Randy, really quick, I just, what is the sweet spot on a business? Like, in other words, how many years do they have to be in business, or should they be in business before they try and get a business loan?
You know what? It's not really, there's not really an answer, because really it's more how much easier it's going to be. So you can come in as, you know, a business owner, you're buying a business and you have the experience and you have the wherewithal, you have everything, and you could still get lending for sure. Sometimes they'll ask you to put, you know, say, hey, we're going to put your house up, or you're going to do this, or you do that. They need to see skin in the game. Where it becomes easier is the established businesses. But when we look at tax returns, as you know, a lot of small businesses, and this is what I tell people all the time, they, you know, and this is where Dennis comes in. He helps with the taxes and he helps them save money and things like that. But when it comes to lending, you know, if someone comes to me and goes, I'm a multimillionaire. All right, well, show me your taxes. If your taxes don't show you're a multimillionaire, you're not a multimillionaire in the bank's eyes. You're not lendable. So if you're showing losses, that's great personally, but when it comes to lending, it becomes very hard. And I run into that a lot. And it just depends. I mean, it's what's more important to you, and that's what we're here for. Like I tell people, this is what we have, and it's whatever you're most comfortable with, but this is what I suggest. But after that 2-year hump, life just becomes a lot easier. you know, so, and like I said, the more established in the type of industry is, you know, always big. But it doesn't mean because you're brand new, you won't get anything. It's just, you got to do a lot more homework for sure.
What's
And
the
Randy,
worst
from the
industry?
SBA side, oh, sorry, from
Oh,
the
sorry.
SBA side, what is, you know, what, don't they have things to try to encourage the startup or the smaller businesses? Are there
Yeah,
special-
so what they'll do is like right now, I think we're running a program where they're waiving all fees for these programs. Like a lot of times when you're doing SBA loans, there's a lot of fees involved. Right now, I believe they're still waiving fees. But yeah, that's why it was really designed to help entrepreneurs and small businesses get a leg up, you know. So when we're doing what we require though is a little bit more work, such as, like I said, a business plan is huge. You should always have a business plan anyway. You should be working with someone to get a business plan if you're starting a business. There's a lot more involved because you're still new. But yeah, they definitely encourage everybody, I think, and they have a lot of great programs. It depends on, you know, what type of industry you're in, what the money's for, and it's a lot of it too is your own personal background, your financial background. But like I said, it's huge. I'm sorry, your credit score is huge when it comes to lending. I tell people all the time, like your credit score is really big when it comes to lending. It's one of the most important things, and it's right. You, like I said, if you're getting a car, you're doing anything, you need good credit.